This morning, we saw a major move higher for risk assets. I'm taking a look at the S&P 500 on a 5-minute chart, and you can see there it is. The CPI number came in and the market ripped. And it wasn't just the S&P 500. Take a look at the NASDAQ as well, the Dow Jones, the Russell 2000 index also jumped. And we even saw Bitcoin make a major stab higher, up 3%. Let's take a look at the numbers. So here's the CPI report, which came in at 2.9%, which was on forecast, which was forecasted at 2.9. So you might say, well, why is the market up so much if the 2.9% reading was not much better than expectations? Well, it's because when we take a look at core CPI actually trickled lower. So on a year-over-year basis, core CPI removes food and energy from the ratio, and that number was better than expected, which is a really important figure for the Fed. We also are coming off of a day yesterday where we saw PPI come in softer than expected. So now that we have most of the inflation report in front of us, we can say PPI was a win, CPI was mostly a win, and combined, we've got a solid victory for the inflation fears that we went into this week. If you started out this week, you saw everybody, including myself, on edge about wondering, is inflation going to seriously become a problem and ramp higher? Well, this week's data basically gave us a little bit of confirmation that we're not in, the danger zone, and that perhaps the strong economy can persist a little bit longer. Today was a really solid day for some of my core positions. I'm long the S&P 500 after we tagged this key area of support. We did go down and test a little bit against that area, but snapped back very well, and today's follow-through move to the upside is looking really good. If you take a look at the gaps, of course, in the SPY, when you trade the ETF, there are gaps. You can see, yes, we left a little bit of a gap open. I would actually love to see that continue to rip higher, and what we really need to see on SPY for my personal position would be a breakout through this structure high. And at which point I'd be looking to trail stops into profit. I also have a Bitcoin position. I'm trading IBIT, and this thing is absolutely ripping off of this trend line, as well as key horizontal support right around this area. I went long, and we've got a nice start here to the Bitcoin trade. We'll see if it can persist, but really loved the technicals. And Edgefinder was giving us a really strong signal on Bitcoin. Take a look at very bullish readings. I took this trade inside of the VIP group, which I'll show you now. So anytime I take a trade, I share all of it inside of our Discord server. So if you're not already a VIP member and are considering joining, basically you get all of my entries, all of my exits, and most importantly, the analysis behind why each trade is taken. If you're not already inside of the VIP group, it's an excellent time. We're doing our New Year sale, and everything is 30% off of our VIP service. So you can get access for 1 month, 1 year, or a lifetime. If you want more information about the prices, all of it can be found in the description down below. Additionally, if you speak directly to our support team using the first link in the description down below and let them know you're watching today's CPI video, they'll give you an extra 5% off. So you can get 35% off for a very limited time. That sale is ending very soon. So come join us in the Discord. We'd love to have more people join us. Again, trading Bitcoin, S&P longs. I mean, this has been a heck of a week. And again, I think 2025 is going to be a really good year. Taking a look at the dollar index, we saw it retreat a little bit here. You can see back down to this trend line that we've been monitoring, coming down and testing this area. I actually would not be surprised if the dollar index continues its overall upward trend, but it has been due for a bit of a pullback. So whether it's a bounce from this area or a bounce from this area, I still think that the dollar uptrend is intact despite this cool inflation data, which arguably across many markets was a very good thing. We needed the dollar to relax a little bit in order to get yields to come down. And that's exactly what we've got here, guys. This is a chart that I have been discussing tirelessly on the channel. This is the US 10-year government bond yield chart, and we've come up to this really, really long-term key level, this 4.7% level. Now, what are we looking at? This is the yields that are offered on US Treasury bonds, and when they're rising, what that usually indicates is that bond investors are saying, I'm not buying those bonds unless the yields go up. That is why bond yields and bond prices move inversely to one another. So bond yields have been rising off of two main things. First of all, the US economy seems really strong. So people are saying, why would I buy low risk bonds when I could get out there and get a return in the stock market? again, it makes bonds less attractive if the economy is ripping, because I could go out and buy, stocks that are earning a lot more and growing rapidly. Why would I buy bonds, right? So the yields go up for that reason, but they also go up because inflation concerns have been high. And so exactly what we saw today makes a lot of sense. Yields dropped on inflation coming in softer than what was feared. So understanding this chart is very, very important, guys. I talk about it very frequently. If you're somebody who trades gold or indices or currencies, you need to keep an eye on the 10-year. This and the dollar index move together most of the time. You can see the dollar index has been moving with the 10-year chart, and this relief move in the dollar has been awaited by many to give a little bit of confidence to risk assets like stocks and Bitcoin, etc. So if we take a look really quick, we'll come back to the S&P 500, then we'll do gold after the indices. So a nice little push. What I'm looking for in SPX would be a push through this resistance, like I mentioned, in order to trail my stop loss personally on the SPY signal that I've shared inside of our VIP room. NASDAQ also looks really good. Nice bounce off of this level, and we're recapturing what was resistance now. We can turn back into support, and this looks very, very constructive for the NASDAQ going forward. I'd love to see this thing actually break through this downward triangle that we've got forming, in which case I think we could actually start to see a recapture of those all-time highs. I want to show you a really powerful behind-the-scenes chart that I'm working on within the Edge Finder. And just a heads up, this chart is not yet publicly available within the Edge Finder. I'm still working on getting it done, but I'm going to call this the US Economic Data Screener. Check this out. Everything is blue. We have got most ratings for the US economy coming in better than forecasted. And this is why I remain adamantly long US indices and Bitcoin, is because we have stuff coming in really strong. Even today's core CPI remained unchanged, right? But core CPI was our winner today, adding yet another blue check mark to the bullishness for the US economy. You've got inflation staying kind of where it's at, or at least not breaking the 3% level for CPI headline, and yet US economic data is rolling in better than expected, left, right, and center. So I'm going to continue to stay where I'm at. Bullish indices, bullish risk on assets, because the US economy continues to hum along. Not having this data would be a serious misstep, in my opinion, if you are trying to be a fundamental analyst. If you don't already have access to the Edge Finder, all the information can be found down below in the description. And you can also try it for 30 days if you want to sign up for a trial. Our trials are $199.99 for, that's $199 for 30 days access, and that gets credited towards your final purchase of the tool. If that's something that you're interested in, use the link on our description down below to chat directly to our support team, and you can try out our software for 30 days. If you're serious, I'm telling you, I'm so excited for this new indicator, because something so simple like this is something I have yearned for analysis for many years, and we're very close to having everything in here. By the way, we're going to add more to this. PPI, core PCE, jobless claims, all that data is going to be on this screen. And if you're an Edge Finder fan, then you may be getting excited like I am right now. This is awesome. So can't wait to see how this turns out in the end. I had a question inside of the group today. Somebody said they were watching the stream and they were asking what I thought about the gold movement during CPI. And I gave them this response. And like I said, if you're in the group, you can chat with us anytime. We're always discussing markets. I said I'm still very neutral on gold. Economic data is strong, which is bearish for gold, right? US economic security is not something that is necessarily a very bullish case for gold. However, there's also geopolitical uncertainty with Trump taking office, etc. We'll see where that goes. And that is arguably bullish for gold. So until one of those two things changes dramatically, I think gold is just going to continue to range. I also mentioned I've been way more focused on indices and Bitcoin recently, and this is the power of being a fundamental based trader and using a system like the Edge Finder to spot ideas. What is so key here for traders, investors, etc., is if you had spent the last few months fixated on gold, it's gone nowhere. And the economic data has suggested that that's likely where it's gonna go for now and continuing, right? We see a mixed story for gold. I don't like to trade mixed stories. So although I love trading gold, it's one of my favorite things to trade, you have to be able to put something that you're watching to the side if nothing is going on with it. There's an expression for this in Wall Street. They call it dead money. When something doesn't have like a strong case, strong story to go up or down, and you're looking at it all the time, it's dead money. Your money is sitting there doing nothing for you, as opposed to spotting some of the opportunities out there, right? In my opinion, this pullback in indices has looked attractive, and I've been waiting on it, but same thing with Bitcoin, right? I think that there's more opportunities in these charts than staring at gold. So I encourage you, if you're somebody who is becoming a fundamental trader, if that's something your aspirations are focused on, don't get caught up in the idea that you can only trade one thing, because it's actually dangerous, in my opinion, to only trade one thing as a fundamentalist. As a fundamentalist, trading one thing, in my view, is not the way, because there are times where just nothing's happening, and for months you can have nothing going well, nothing moving. And as traders, we need movement, we need volatility, we need stories that are strong trends to get behind, not stuff that's moving nowhere. So for me, gold continues to look boring from a technical basis, still waiting, as we have for months said this, for a breakout one way or the other. And don't get me wrong, you know, if you're somebody who's watching gold and you watch my channel for gold updates, I get it. It's not fun for me to say gold's looking boring again and again and again. I'd prefer to have something more exciting to say, but I'm a fundamental analyst and I have to look at what is actually materializing. And right now, you've got a nice reaction of gold here, but we don't have a clear screaming headline story that I want to get behind to go long or to get short, right? So I'm going to continue to wait. And again, I think my money is better focused somewhere else right now. And there's nothing wrong with just acknowledging that and just moving along and not, you know, if you're forcing trades on gold right now and it's just whipsawing back and forth and you're losing money, then again, I would encourage you, just consider what it would look like to trade more than one thing and just put something to the side that's not moving well. And other currencies are finally getting a little bit of a bid. The euro moved higher here today. The pound also saw a little bit of upside move, but this is still, again, just showing how strong the dollar is. These are some of the charts that actually just look like they're setting up for more dollar bullishness, in my opinion. That being said, although inflation data was good news here today for the market, I don't necessarily think it completely ends the dollar uptrend. I continue to be dollar bullish overall, but a little bit of a relief pullback was very necessary, in my opinion, and also very good news for a lot of risk assets. We've also got the euro yen, pound yen, dollar yen, all kind of moving lower. With this weakness, the Japanese yen is kind of asserting dominance on currency reserve status, at least right now. We'll see if that stays the case, but yen pairs looking kind of interesting. If you take a look at the top setups page on the Edge Finder, yen pairs have already been kind of very bearish for a while here, and that's an interesting signal to keep an eye on. If we see some technical setups to the downside, should be a fun one to watch. The yen pairs, when they get all kind of bundled up like this, very bearish, I've noticed that oftentimes it does lead to some very kind of across the board yen movements like we're seeing today. And oil prices, despite cooler inflation data on the core CPI front, still just snapping back and holding the gains that they've made recently. This is really impressive price action. And if we do get a breakout of this 78 level, 79 level into the 80s, if you get something like this, there's a possibility that oil is just going to continue its rip here. That being said, I prefer looking for setups on the long side. If we get down to like the 50% retracement, this has been an Edge Finder top setups in the Edge Finder's top setups page for a while, and I'm just waiting for a dip or an opportunity. But again, currently trading a couple things, so I'm not in a rush to add new trades, but any new trades that I take will be shared inside of our VIP service. Today's video is sponsored by Vantage Markets. If you're someone outside of the US looking for a better brokerage, stick around for a second. I'll tell you a little bit about what they offer. First of all, they allow you to trade a ton of different markets all in one singular brokerage. You can trade CFDs on stocks and indices, cryptocurrencies. You can trade Forex, gold, all of that in one brokerage. They have great, costs to their trading relative to the industry, and they offer a pretty generous welcome bonus for people who are subscribers of my YouTube channel. The link down below in the description will qualify you for that, or at least give you some information about how you can qualify for that. So all of that can be found in the description down below. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.